Alright guys, welcome back to the USS Armageddon, and there's no turning back on this tariff war. Many countries including America's neighbors are affected. Mexico is reeling, while Canada is trying to fight back. But a big bombshell is coming on April the 2nd. Trump will unleash both reciprocal and sectorial tariffs in less than 2 weeks. Now I want us to work on the assumption that Trump is serious, that he won't roll back anything. This is his final term and there's really nothing left to lose. It's all about legacy now. Trump is going to target key sectors in the global economy. Cars, semiconductors, and pharmaceuticals will be punished with a 25% tariff, but food imports, lumber, and copper exports will also be targeted, and chances are it would also be a 25% tariff as well. Now, why is Trump targeting these specific sectors? It's not just to farm revenue from the American people. It's important we understand the administration's plan. The main purpose of the tariff is to reshore production of critical industries without regard to how much Americans have to pay for their goods. Now, Besson just told us the truth that the American dream is not about access to cheap goods, it's about defending industries and creating jobs. So he's willing to trade people's standard of living for this grand reshoring experiment. Even if the US enters a recession, Trump probably won't stop. It's pedal to the metal until either US industries come back or the entire economy hits a brick wall. Take copper production for example. The US has the fifth largest reserves in the world. However, they only produce 1.1 million tons a year. Their production is below China, Peru, the Congo, and Chile. This is a supply chain deficiency that Trump wants to solve. He wants a mining revival to boost domestic production. The US imports nearly half of their refined copper from overseas suppliers. That's around 1 million metric tons annually. The only way to revive the mining sector is to make foreign imports so expensive that domestic producers can finally compete. Now, how is that possible and is it even sustainable? Here's the crazy answer. It's possible if US consumers permanently lower their standard of living and subsidize these companies by paying more for their goods. And once we understand this, it's simple to see how China is beginning to retaliate back against the US economy. Throwing counter tariffs on all US imports will only raise inflation for their own people. Beijing doesn't want to do it because it will hurt their standing when trying to expand trade globally. So the counter move has to be surgical and must not hurt China's economy. So they have officially halted all US LNG imports. It's like a cancellation of all future plans. China hasn't imported anything from the US for 40 days, the longest gap in almost 2 years. This is the result of just a 15% tariff on American LNG imports. There are simply no shipments to China anymore, and that's how effective China's tariffs are because their supply chains are extremely well fleshed out. They can find alternatives in the global market. That's the difference between Trump's strategy and Beijing. China still wants to lower prices for their manufacturing to boost domestic consumption. The US, however, wants to reshore industry by getting their citizens to subsidize domestic producers. Trump wants to bring home production at any cost, and he tells us that the US is trying to build a self-sufficient economy because if prices are that high, they can forget about competing in a global export market. Since 2021, the US has been selling 400,000 tons of LNG a month to China, but now this will probably drop to zero for the indefinite future. Beijing is now looking to buy the supply from Asia Pacific or the Middle East. Now, this isn't because prices are cheaper there, they might even be more expensive, but it doesn't matter now. It's because China is trying to drive revenue down for US LNG exporters. Beijing is the largest importer of LNG, buying over 80 million tons a year. And when you cut away demand, you threaten to increase supply and drive profits down for US suppliers. And if this continues for long enough, new projects could get delayed or even halted. But that's just the top of the iceberg. As the US moves inwards, Beijing is moving outwards. China is using their huge consumer demand for energy as a bargaining chip and lifeline to build stronger economic relations with countries within their sphere of influence. To secure more LNG supply, they signed a 15-year contract with Australia's Woodside Energy, and that will bring them 600,000 tons of fuel annually for 15 years. Now, is China paying more? Perhaps, but consider the diplomatic benefits. By diversifying their supply chains with Australia, it ties both economies together even closer. So, if one day the US tries to order Australia to punish China with trade tariffs, it would be that much harder to pull the trigger. Trump's tariffs are forcing China and the world to band together to bond closer with each other. Now, this is really weird because Trump should know better. He just admitted that he's a student of history.
So, as a student of history, which I am, and I've watched it all, the first thing you learn is you don't want Russia and China to get together. With that being said, no, it's not a big part of it, but maybe that'll happen or maybe it won't. Obama really forced them together through energy and bad energy policies. And when he did so many different things, he forced a marriage which would never have taken place. It was not a natural.
So as China continues to cut trade with Trump's economy, it seems the opposite is happening with the US. Now we know he has imposed an additional 20% tariff on Chinese goods, but here's the problem. The majority of consumer goods the US imports are from China. Up to 80% of Walmart merchandise comes from Chinese suppliers. From plastics to computers to smartphones, all of this comes from a factory somewhere in China. And once you realize this, you understand why spending in the US is under tremendous pressure. This goes beyond EVs or Chinese solar panels. When the cost of your everyday stuff goes up, there will be backlash, there will be cutbacks happening, which means US retailers from small chains to the big box brands could suffer a significant fall in their revenues. Profit margins will also get hammered. Besides Walmart, Costco is another US chain getting squeezed. They posted earnings of $4.02 per share in the December to February quarter, missing the estimates. As a result, their share price dropped by 7% after the earnings report. Now that Trump has raised tariffs on Chinese goods to 20%, Costco is in panic mode. Their margins are now under pressure. So should they brace for impact and accept lower sales? Should they pass the cost on to the consumer? Well, it looks like they are trying an alternative playbook. They are following the Walmart playbook of asking their Chinese suppliers to eat the tariffs. Now, Costco is pressurizing suppliers in mainland China to cut their prices, to basically absorb Trump's tariffs and spare US consumers and their bottom line. Now, this isn't good for Chinese suppliers. Their margins are already razor thin. That's why Chinese goods are so cheap around the world. Asking them to eat a 20% tariff or even just half of it will be quite impossible. It's a clear sign that retailers are getting desperate, and it's an even bigger signal that US consumers are simply tapped out. Walmart, Costco, they're all making a big gamble. The same one that Scott Bessent, the US Treasury head, has said on national TV.
Because I believe, especially with the China tariffs, that Chinese manufacturers, they will eat the price or eat the tariffs. I believe that the currency adjusts, and I believe if we look during President Trump's first term, that all the other things we do, if we're deregulating, if we're getting energy prices down, then if we look across the spectrum, Americans will realize lower prices and better affordability.
Here's the bet that Chinese suppliers will be desperate enough to access the US market, that they will discount their products to drive sales. And let's play devil's advocate for a bit and say Bessent is partially right. Maybe some Chinese suppliers do slash the prices. It will only just escalate the trade war even further. Doesn't it occur to Bessent there are also many US companies on Chinese soil operating there, selling to Chinese consumers? Costco has at least 6 stores in China with over 140,000 people as members at the Shenzhen outlet alone. Selling in China is difficult, especially when your demographic are thrifty shoppers. But business is still booming. Just look at the crowd that's swarming into Costco. Now, we don't know the backlash that might come from Beijing. China isn't shy about putting companies on their blacklist. Brands like Calvin Klein and Tommy Hilfiger has been placed on the Chinese blacklist, and this could lead to operational restrictions, including potential bans on imports and exports, and in the worst case scenario, it might even lead to store closures. And that's why fighting a trade war with China isn't that straightforward. There are so many second order effects that none of us can really predict. Now, I fully expect the bulk of Trump's tariffs to be eaten by US consumers. I don't think US companies will want to risk their position and abandon their market share in China, because once they lose it, it'll probably be lost forever. According to Deutsche Bank, Chinese consumer sentiment is starting to recover. 54% of respondents say they feel financially better than a year ago. The amount of people anticipating an income increase has also risen to 60% as well. China's domestic consumption might be turning a corner, and if you're a company, local or international, you don't want to miss out on this. The Chinese economy is a very interesting case. There are parts like real estate that's still collapsing and industry output that's rising. But for foreign companies, all you really care about is the strength of retail sales, especially during this tariff war. Now we can see something interesting. Retail sales growth is starting to recover. Now we have to take away October's spike because that was thanks to Singles Day, the mega sales then, and China's Golden Week. So that bright spot doesn't really count. But even without that, since November last year, retail sales are heading up, whereas in 2024, it was mostly struggling in Q1 and Q2. Beijing is going to unleash the stimulus tsunami and reduce a ton of red tape, and that is going to boost domestic consumption like no other. So the Chinese market is going to be a big growth engine for American companies. Conversely, Trump wants to slash down deficit spending, and that's bad for domestic spending in the US. And we can see this bearish outlook play out in the global equity markets. The stock market is a very strong indicator. Investors, they are placing their bets, and it's not on US companies this time. According to Bank of America, US exceptionalism has peaked, and it might be a downhill ride from here. In March, fund managers are pulling out their investments from the US market. It's a big 40 percentage point plunge from the previous survey, and they are relocating it everywhere except the US. It's going into the EU, the UK, and emerging markets, which includes China. Investors are trying to front run the coming recession. They see the storm cloud building, and they probably realize that Trump's trade war is for real this time. So they're pulling their money out and throwing it into other markets that could outgrow the US. So one thing's very clear from this saga: China and the US, they will be decoupling in a very big way. It's time to throw away the old playbook of globalization and world cooperation. We are now operating in an economic minefield. But let me know what you think. Will Trump wage his tariff war to the bitter end? And how will China continue to fight back? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.